question, and let's get back to the big, stock. Solid performance from M&M in Q1. Revenue strong surge. Anish Shah is with us. Anish, thanks a lot for joining us on CNBC-TV18. I know you made a lot of clarifications on the RBL Bank investment in the press conference, and I was listening into that very keenly. But I just had one or two, follow-ups before we move on to the business. You did say that the primary purpose is to understand banking and, which will enable you folks to sort of enhance the value of your financial services business. But what is the eventual game plan? At any point in time, would you be looking to convert MMFSL into a bank, to eventually merge RBL Bank and M&M Finance? What's the eventual game plan that you're looking at?
Sonia, good morning, and pleasure to be here with you. RBL is essentially a profitable option play for us. It is a great investment in a very solid bank. And as I said, it's a very profitable option play. I'm actually surprised at the amount of media attention that it has received. And at this point, we've clarified in no uncertain terms that our capital allocation policy remains completely unchanged. This is a 400 crore investment in a sector that we know very well, that is a core sector for us, where we have a business that is valued at close to 40,000 crores. And therefore, it's really part of value creation for us, which is something that we have been driving. And that's something that you're seeing in the results that we've declared in this past quarter, but not just in this past quarter, over many quarters in a row now. We've had very strong results. So that's really where we are focused.
Yeah, I understand that, Anish, but I think the reason there was so much media hype about this and investor hype as well is because ever since you have come on board and taken over, you've focused a lot on capital allocation, right? You've put in a very strict capital allocation policy in place. And this move came as a surprise because it's contrary to what you've put in place yourself. So just one more question on this. You did say in the press conference that at this point in time, you don't look to raise your stake any further. But in terms of a timeline, any targets that you have in mind? And I mean, in the next 1-2 years that perhaps the stake can go up to less than 10%?
Nothing at all. We don't expect anything to change for the next 2 to 3 years. As I said, it's a profitable option play. And just going back to your point, the capital allocation policy remains as firm as ever. In fact, we've strengthened it even more. And our focus, Sonia, is really to create value. And it's not just about where we allocate capital, but the execution on that as well. And that's something that we've demonstrated in a very strong way.
Anish, good morning. Prashant here. Sorry, just one more. Please bear with us. And we'll get to the numbers, etc. in just a bit. So you're saying two questions, actually. You said that this is an area that you well understand. What will just 3.5% allow you to do? I mean, you will be like any other shareholder in that sense, right? You will get the same information. You will get you'll have the same access to all the data, etc. So what do you hope to do with this? You said this is an option value kind of thing. That is one. And second, you will. And from here out, you're clarifying that you will only, which is the capital allocation policy, you will only invest in core businesses which can deliver a threshold return of 18%. You're clarifying that. So two-part question. Go on.
Yeah. So Prashant, good morning again. And I'd say the same thing, Prashant. It's a profitable option play for us. This is a small investment in a sector we know well. It's an investment of 400 crores. In the space of services for us, which has generated over 5,000 crores of cash flow in the recent past, which is what we shared on Friday as well. And therefore, I really wouldn't read much more into this at this point. M&M is on track to deliver its commitments. In fact, it has been delivering more than it's promised. We are on track with regard to growth in all our core businesses. Many are firing on all cylinders. Some are going through a process which is going to deliver much faster growth. And on balance, I would just say that we've got a group in automobile, in farm, and in services that has been performing at a very high level, and that is on the bedrock not just of a capital allocation policy, but on the execution that our teams have shown.
All right. Hi, good morning, Mr. Shah. Nigel on this side. I think we've gone on enough about RBL Bank. So let's talk about happier things. The EV investment that came in from Temasek. My colleague Sonia Shenoy had broken that story as well, and you all have confirmed it in your release. So tell us, what's the plan out here? Will Temasek look to increase stake out here? The money that you all have raised, how will you look to use it?
So here we've tried to keep the dilution limited, because this is a space where we've got a lot of confidence. We've been a leader in EV in the past. We paused a bit on that front because we've had to really come up with born electric products, which our team has developed now, and we will be launching starting next year. The validation of this was evident when BII came in as an investor, Temasek coming in again at a 15% higher valuation in a global context where electric vehicle valuations have gone down significantly is a very strong positive statement as well. And we feel that with both BII and Temasek, we've got two marquee investors who can help us grow the value, enhance the value of this business even further. And we just feel that we are in a strong position to regain leadership in electric vehicles with SUVs.
So, Anish, just one more question. This Mahindra electric automobile, right, where you plan to start rolling out products from 2025, what happens with that subsidiary? I mean, eventually, will it sort of will the earnings start showing up in M&M's consolidated numbers? Do you plan to spin it off into a separate listed entity? I mean, if you can just give us the eventual game plan, because there's so much investments coming in there right now.
Yeah, so the results will show up in M&M's consolidated numbers. And our game plan on that 5-7 years down the road could potentially be to spin it off. At this point, again, too early to say. All options will be open for us. But the benefit of having it in a separate electric entity is that all those options can come into play at the right time.
Okay, that's quite important. So potential game plan is to spin off the EV business in the next 5 to 7 years.
Sorry, I would just rephrase that. Spin-off is an option in the next 5 to 7 years. We've got to do a detailed evaluation whether that makes more sense or not. So it is a possibility, it's an option, but that is not the game plan right now.
Okay, you said it already, so we've taken what we can from that discussion. But you said also earlier that you plan to launch a new EV every 6 months from 2025. Now, what does this mean for your EV portfolio as a percentage of your overall portfolio? How much do you plan to take it up to? 30%, 40%? And what would this also mean for your blended margins? I mean, margins this time we're at multi-quarter highs, almost 15%. Once EVs become a larger portion, can you even take the margins to 20% over the next 2 to 3 years?
EV will be about 20 to 30% of our portfolio in 2027. We will have a range of born electric SUVs, about 5 of them, potentially 6 or 7, depending on a couple of new products we're looking at. And it will be a very attractive set of products. In terms of margins, our margins are going up again because of operating leverage in our auto business, the volumes that have been going up significantly. As you know, we've been putting in more capacity as well. Second is just strong execution. And some of that will continue and will have a positive impact on margins. For us, ideally, electric vehicles shouldn't change the trajectory of our margins. They shouldn't be more profitable or potentially less profitable in the longer run. In the short run, as with every new launch we have, we see lower margins when a new vehicle is launched, because that's part of the cycle. It's part of building the brand. It's part of being able to reduce costs once we've got certain volume. And that's what will likely happen when every new vehicle is launched in the electric space. But as I said, we expect that to be 20 to 30%, so not a very significant number. And therefore, that may have a slight dampener on margins initially. And then that will come back, but that is something that we would expect, whether it's an ICE product or an EV product.
Anish, sorry, briefly, if I can just touch upon the XUV 400, the E XUV 400. What's the monthly run rate that you expect here? I mean, if you can tell us that. Because I think when you had launched this back in Jan or Feb, the order the order bookings were pretty strong. Is the demand coming up, shaping up well, or is it taking a bit more time?
The demand is shaping up well. It's a product that's best in its class today. And it's one that has a very strong value proposition for the customer. So it is shaping up well. And it's a very good space for us to be in today before we launch our whole range of electric SUVs.
Okay, well, Prashant showing a lot of interest in that. Maybe you'll see Prashant, zooming into CNBC office in a new XUV 400 EV. Prashant?
I'm going to keep an eye on you, Prashant.
Given the state of traffic and roads, I mean, it's just you got to fly in or something, maybe.
Okay, all right. Well, ambitious there. But thanks a lot, Anish, for joining in, and thanks for being with us on CNBC TV18.
Thank you.
Okay, well, that's the word coming in from M&M. They say that RBL Bank is a profitable play for them and their capital allocation policy remains absolutely unchanged.